Hey, what's up, guys? Welcome to another training video. So this is our training session, guys. Somebody earlier asked if I can just speak about trend lines real quick. Then I said no. We're gonna touch some basics, and then we're just gonna speed through everything so that you just have a basic understanding of what's going on. Okay. So let's touch on some of these basics, guys. Okay. So now, in order to trade effectively in the markets, guys, you need to understand some of the fundamental concepts about trading, okay? So trading is all about looking at the price, all it does, it goes up and it goes down all day, every day, okay? So in order for us to, capitalize from this market, we need to understand, on a basic level, how it moves and, how we can actually benefit from those moves. Okay, so like I said, the market can either go up or it can go down like that. Okay, and then when it's going up, we are looking to open up buy trades. All right, and then when the market is going down, we're looking to open up sell trades. All right. So if we take it a step further, we need to analyze how the market moves. Okay, so obviously, the market moving up and down is just the basic way that we'd understand it. But if we look at it at a deeper level, we can see that the market, when it goes up, it doesn't just move in a straight line, but rather it moves in a sort of zigzag type of fashion. And then when it's going down, it doesn't move down in a straight line, but what it does, it moves in a sort of zigzag type of fashion. Okay. So that's what the price does. Okay, that's what the price does. It moves up and down. We're looking to get buying opportunities and selling opportunities. So if you're a beginner, you need to understand that when you click buy, you will only make money if the price goes up. And then when you click sell, you'll only make money when the price goes down. Okay, so that's basically how it works, on surface level, right? So now we need to understand the behaviors of the market before we get to the trend lines, okay? So you need to understand a few things, guys. You need to understand that the way that the market moves, when it's moving, it has certain behaviors, okay? It doesn't just move up and down and all those nice things, but there's certain behaviors that the market will do, okay? So there's three conditions that the market will have, okay? So the first condition is when the market is making a series of higher movements, and you can clearly see that the market is going up, okay? So this first instance, we call that an uptrend when the market is making a series of higher highs and higher low points, okay? The market is moving higher, okay? And then the second condition, let me just erase this so that you guys don't get confused. The second condition is when the market now is progressively moving to the downside, okay? It's progressively moving to the downside. So in this condition, we call this a bearish market or downtrend, okay? And then the third condition that we have is when the market isn't making a clear uptrend or it isn't making a clear downtrend, but rather the market is moving between two levels, okay? Between two levels. So let's make it blue. Let's say the market now is moving in between two levels. It's not really getting out of these conditions or these levels, okay? So now, these are the three main conditions or states that you'll find the market in, okay? These three right here. The market will either be moving in an uptrend, it'll either be moving in a downtrend, or it will be moving in a sideways trend, okay? And a sideways trend is not really giving us a clear direction, okay? But all three of these conditions are tradable, right? So if we're talking about general terms, guys, in general terms, the market, when it's in an uptrend, you want to look for buying opportunities. Why is that? Because you buy when the market is going up. And if the market is in an uptrend, the likelihood of it continuing to the upside is higher than when it's in a downtrend. Okay? Awesome. And then in a downtrend, in this situation right here, we want to look for selling opportunities. So in a downtrend, we want to look for selling opportunities, okay? Because the market is making clear indications that it's going to the downside. So in a downtrend, we're looking for sell trades, okay? Now, the sideways trend is a bit different as to how we'd approach it, but typically in a sideways trend, you want to sell at the top of the range. Okay, you want to sell at the top of the range. You want to sell at the top. You want to sell. Okay, hold on. Let me remove this. You want to sell at the top. Okay, and then you want to buy at the bottom of the range. Okay, so what that means is you want to, whenever the market comes to the bottom of the range, this is where you'd want to buy. Okay, and then whenever the market comes to the top of the range, this is where you'd want to sell in these instances. Okay, so now if we go a step further, okay, these in a sideways trend is a little bit more complex than an uptrend and a downtrend. Okay, because an uptrend is straightforward. You're looking for a buy trade because the market is going up. A sell trade is straightforward because you're looking for the market to go down. Okay, but in a sideways trend, okay, in a sideways trend, guys, in a sideways trend, you have an instance where you've got the price busy moving in between two levels, okay? You've got the price moving in between two levels, okay? So when it's at the top of that particular range level, that's where you sell. And then if it's at the bottom of that particular range level, that's when you buy, okay? But you need to understand, guys, these conditions, they don't continue indefinitely. So if the market is in an uptrend, it won't be in an uptrend forever. At some point, it will go sideways and then it will eventually go in a downtrend. Okay, so that's just the typical nature of the market. So if we are looking at this third condition right here, where the market is going sideways, we need to understand that when now we're buying and selling at the top and the bottom of the range, there also exists another situation where the market will escape the range and then there are more opportunities to trade here. Okay, this is where it gets a little bit tricky. It's not that tricky, but just try to pay attention. Okay, so when there's a range like this, guys, okay, the price will eventually break out of the range. Okay, so usually those types of opportunities, we call them breakout trades because the price now is leaving the range. Okay, which means what? How do we deal with that situation? So let's say we've got this situation where the market is moving in between two levels, right? And then now it goes to the top of the level. But remember what I told you, I said at the top of the range we sell. But now sometimes the situation happens where the market escapes the range, okay? And then when it escapes the range, that gives us an opportunity to buy when there's a breakout, okay? You buy when there's a breakout at the top of the range, okay? And then you sell when there's a breakout at the bottom of the range, okay? So if the price breaks out at the bottom of the range, that's where you'd be looking to sell, okay? Right, so those are some of the basic principles of how the market moves. Okay, so now let's take it a step further, right? So when we understand that, okay, there's states in which the market moves, there's different behaviors that the market will show us when it's moving, okay, then you need to also introduce or get to know other concepts as well, okay? So let's go back to the situation where the market moves sideways like this, okay? Sideways like this. So now, in a sideways market, there's two levels. I now remember the market is moving in between two levels. So if I were to draw a horizontal line at the top of this range, okay, and if I were to draw a horizontal line at the bottom of the range, okay, we'd clearly see which levels the market is playing around, okay? So now these levels, okay, these levels have names, right? So the bottom level, they call this the support, okay? Which when they try to explain it, some trading mentors explain it, they call it the flow of the market. And then the top level is the resistance, okay? All right, that's the resistance. So the top of the range is the resistance and the bottom of the range is the support, okay? And the general rule of thought when it comes to support and resistance is you want to sell when the price gets to a resistance and then you want to buy when the market reaches the support, okay? Because when you see the market reaching a support, that's how you imagine it to be a sort of concrete floor. Okay. So on a concrete floor, the only place that the market would likely to go from there is up. Okay. So that's how we interpret it. So support and resistance lines. So the resistance is the ceiling of the price. Okay, it's that level where now it's the level at the top where the market just keeps bouncing off of from. Right, it's the ceiling, right, and then the support is it's the flow of the market. Right, so on a resistance you want to sell. And then when the price gets to a support, you want to buy. Okay, so those are just the general rules. Okay, now, these horizontal lines that I'm talking about, you draw them onto the price by connecting the turning points, right? So, support and resistance lines, they can be horizontal like this, and then sometimes they can be in an inclined fashion, right? They can have an incline, they can be something like this. You can see the price moving up and down like that, okay? So when you see this type of behavior that the market does, okay, that's when we draw our trend lines. Our trend lines are the support and resistance levels drawn at an angle. Okay, I'm not trying to make this sound difficult. Let's just keep it as simple as possible, okay? So the trend lines are the support and resistance levels at an incline level, like something that you see here. Okay. So these straight ones, the horizontal ones, we'd call those support and resistance. And then these ones with an angle that aren't horizontal, we call them trend lines. Okay. So they have the same concept. Okay. So when the price reaches the top of the trend lines, right, the top trend line, we regard that as a resistance, and then when the price reaches the bottom trend line, we regard that as a support. Okay. So that's how we typically analyze and interpret that type of price behavior. Again. So now, when the market escapes the trend line or the trend line range, okay, that's where now you can get into buy trades, right? You can get into buy trades where the market now escapes the trend range, or if the market now breaks the bottom of the trend range, right? That's where now you'd be looking to sell the market or to enter sell, okay? Just making it easy, guys, all right? So that's how you interpret it. So support and resistance is nothing other than trend lines, okay? It's nothing other than trend lines, right? So let me also show you guys another general thing that you need to understand about support and resistance lines and what is this trend lines, okay? So there's different ways to enter, right? So the first instance or the first way that you enter a trend line or resist or breakout trade basically is when the market immediately breaks the range. Okay, that's when you would actually open up the trades. There's actually three ways to enter into this type of situation. Okay, and then the second one would be to wait for the market to escape the range and come back to retest or to retouch the broken resistance or support level. Okay, so that would be a second way to enter or the second entry point. Okay, And then the third entry point would be when now the market does the retracement and then it breaks the previous high that the market made after it entered into or after it escaped the range. So that would be your third entry point. Okay. So let me just make it a little bit more clear, right? Let's make it a little bit more clear so you guys can see what I'm saying. I know I'm going a little bit fast, guys, but you get it. It's not that difficult, guys. Okay, it sounds like it is, but it isn't really. Okay, so let's say this is a resistance right here. Okay, let's say that this is a resistance. Okay, let's just put an R. Like let's make this R resistance. Let's just say RES. Okay, resistance, right? And then let's say this blue line, this is the market, right? This is the price busy moving up and down, doing whatever it's doing, coming. Okay. Now I want to show you the different entry points. Okay. So now here is when you would actually, so there's three possible entries. Okay. There's three possible entries. So now let's say let's talk about the first situation when the market now breaks out of the range. Okay, when it breaks the resistance, when it goes higher than the resistance level. Okay, this is the opportunity, the first opportunity that you'd get to buy the market. Okay, when there's this breakout situation. All right. Okay, that's the first situation. And then the second situation would be for you to wait for this breakout to happen, okay, and allow the market to extend, make a turning point, and then you wait for the market to come back to retouch or retest the resistance level, the broken resistance level, okay? And then once that happens, once that retouch has been made or that retest has been made, then that's another opportunity to enter into the trade for buy position. Okay, I'm just talking about how to utilize these support and resistance trend lines type of situations. Okay, and then the third way, right? The third way would be to wait for the market to break out, retest. Okay, after the retest has been done, you want to wait for the market to go above the high that it created after the breakout. Okay, which means that you would wait for the market to do the retest, and then once the market continues going up and it goes higher than the high it created when it broke out, okay, then that's your third trading opportunity right there. Buy, boom, just like that. Okay, that's where you'd buy. Very, very easy. I know if it's like the first time that you encounter such situations, it's a little bit difficult to understand. But the more you see this, is the more that you'll understand. Okay, so let's make the same example, but in the downside. Okay, it's the exact same thing, guys. Okay, it's the exact same thing. It's the exact same thing. So let's start over. Let's say you've got a support level like this. Okay, let's say you've got a support level like that. All right, we're together. Let me just check if we're together. All right. So now in this support level, you can see that the market was bouncing off of this support level, bouncing off the support level, bouncing off the support level, bouncing off the support level. Okay, then it comes back up. So now when the market goes beyond the support level, okay, the first entry, right, or the first entry opportunity to sell would be immediately when the market breaks the support. Okay, this is the support right here, right? That support line right there. Okay, so that's the first instance that you'd be able to sell. Okay, the next instance would be to wait. If you're somebody who's cautious, is to wait for the market to extend, make a low, and then come back to retest the support level. Okay, so once the market does that, then this would be another opportunity for you to enter a sell trade. You guys see that, right? And then once the market has completed doing that, so long, guys. phone call for my wife. Just hold on. Hey guys, okay, so I'm back. My bad, guys, my bad. Just had to answer my wife. Okay. So, anyways, like I said, so this is the second opportunity that you can actually enter the trade. Okay. And then if you're somebody who's cautious, right, you'd wait for the breakout to happen. You'd wait for the market to retest. Let me just use a different color so you guys can see. You'd wait for the market to break out like right there. Okay, then after it breakouts, you would wait for it to retest, and then after the retest you'd wait for the market to come back down to be lower than the turning point or the low point that the market made after it broke out. Okay, and then from there you'd want to actually enter into the trade right there. Okay, so that's how you deal with a a breakout to the downside. You know, it's a similar thing. It doesn't really matter if the support and resistance is horizontal, it's at an angle, it doesn't really matter. The principle still stays the same. Okay. Now, when it comes to our trading system, guys, okay, the best trades that we want, the best situation that we want to see, okay, is we want to see the market trending when it shows us a signal, right? We want to see the market actually trending, right? So let's say now you get the price is something like this and you get a sell entry over here, all right? Or I mixed up the colors, guys. I can't believe I did that. Okay, right? So this is the up, this is the down, okay? So we want, in a best situation, guys, we want to get trading signals when the price is looking like that for a buy trade, okay? So if the market is in a clear uptrend situation, that's when we want to get into a signal, okay? And then if the market is in a clear downtrending situation, that's when we'd want to get into a trade, okay? So that's basically what you have to look at, you know, from a basic perspective when you talk about trend line, support and resistance, and all these things. Also, guys, we also spoke about the three different trading sessions. You guys know this, I always preach about this. Is the Tokyo session, right? The Tokyo trading session. It's the New York session, and then it's also the London session, okay? The London session. So you've got three trading sessions. You've got the first one, the second one, and the third one, right? So you've got the Tokyo session, London session, New York session, okay? So that's typically what it is, guys. That's typically what we need to know in order to get started. If there are people who don't know how to get started, right? So let's say this is you and you want to trade, right? So in order for you to trade the markets, which is over here, right, you need to have a broker, right? A broker right there, a broker. Okay. And then in order for you to invest in the financial markets, you need to go through a broker right there. Okay. So that's how it is, guys. That's basically what I wanted to share with you guys in the beginning. So let's just quickly look at the markets real quick and see what we can find, and then we'll just take it from there, guys. Let's just take it from there. Let's go ahead to and look at our markets. Let's go ahead and look at our markets. Let's have a look at our trades. Okay, guys, so remember earlier we took a signal on the GBP AUD. Right now it's going for TP, what TP is this? TP3, okay? And then the reason we got into this trade is because of this, right? It's because the price was above the 100 period moving average, and then you can clearly see that the market is in a trend. As you guys can see, it's in an uptrend. And then at the bottom of the screen, we can see that the market volatility meter was above 70%. And then TP1 and TP2 was already hit. So then when we got into the trade, we were targeting TP3. Okay, so we're still holding this trade. So what we can do is, as the market is progressing, we can just shift the stop loss to break even or whatever the case may be, and just trail the market. Okay, so let's have a look at another market. Let's see if there's nothing else that we can find. Let's see if the Euro USD. I know that there was like some news event that happened earlier. So, like 30 minutes ago. So, there might still be the ripple effect of that. Okay, so we can see now here's another signal because of the news. This actually happened after the news, you know. Um, so, we can see on the H1 chart, we've got an entry, we've got a sell entry on the H1 chart. We can see that the market is just underneath the 100 period moving average. So this is when I say the market, I'm saying where the price currently is, okay? So the price is currently under the 100 period moving average, right? And then you can see that the volatility meter at the bottom of the screen is over 100%, I mean over 70%, which now validates this trading signal. So if we wanted to trade this, we could actually get into the trade. Since TP1 was hit, we can target TP2 and TP3, and then we can use the stop loss that the system gives us. If I move on, USD CAD, it's actually slowly turning into my. How did we miss USD CAD, guys? I was trying to. I don't think I actually opened it earlier. I don't remember. Okay, I actually don't remember. But USD CAD as well is giving us an entry on the. Okay, on the H1, it's already hitting TP3. But on the H4, we can see that we're on TP1 right now. And then it's giving us a buy signal. So as you guys can see, the market is currently above the 100 period moving average. And then the volatility meter at the bottom is above 70%, which validates this trading signal. So we could actually enter into the trade right there, use the stop loss TP. TP1 has already been hit. So the next take profit that we can take is TP2 and TP3, right? Okay, let's move on. Okay, USD. Okay, my PC is lagging up. No, no, but hey guys, my PC is too powerful to lag. My PC can't lag, guys. It really, really can't lag. Okay. So then earlier we took a buy signal from the what is this market? The USD JPY. Okay. TP1 is already hit, so we're actually targeting TP2. I actually put the at TP3. Okay. So I'm still holding that trade. Just allowing the market to do its thing. Let's carry on. Okay, the GBP USD on the H4 charts saying something. Euro GBP was also a signal that we took, guys. The market is underneath the 100 period moving average. We're still going to hold this trade. TP2 is hit right now. Now we're targeting TP3 on the Euro GBP. Okay, let me just check if my okay, it's still valid. Okay, this trade is still valid. This trade is still valid. So Euro GBP and GBP AUD are performing, which is very, very good. Let's keep going. Let's look at the USD CHF. USD CHF, let's go. USD CHF on the H1 chart is giving us a buy entry because it's above the 100 period moving average, and the volatility meter is well above 70%, and then that validates our trading signal. So if we were to enter into this trade, TP1 is already hit, so we target TP2 and TP3, and then there's the stop loss right there. Let's look at other markets. Let's see which other market is important, guys. Let me see. I don't just want to trade any random market, but the GBP AUD trade and the Euro GBP trade is still on, guys. That buy on GBP AUD, I'm still holding it, and that sell on the Euro GBP, I'm still going to hold it for the next several days. Probably, I might even hold it until next week. Okay. So yes, 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 yes. Let's see other trades, guys. Let's see other trades. Also, another trading signal here on the EuroCAD on the H4 chart, right? On the H1 chart, it's almost going to hit TP3, right? Still got a lot of space. You can actually jump into that one because um, it is it is in between the what is this TP3 and TP2, so it's still valid to trade it, but I would take it on the H4 chart. Okay, CAD JPY, I am seeing the signal. I'm actually gonna take this trade. Let's take this trade. All right, take this trade because the market is underneath the 100 period moving average. And then it's also I'm targeting the long ones, guys, because I like trading long. Okay. I like going into trades for long. So CAT JPY is a sell trade on the H4 chart. Let's go. CHF JPY is a trade on the H4 chart, but so it's a sell trade, but I'm not going to get into that one because of the spread. Okay, the spread. The spread is a problem, right? All right, and then another signal that we're seeing is the GBP CAD, right? Same as the GBP. What is that other one again, guys? That GBP AUD. Okay, so it's also going up. This one usually just follows GBP AUD. They work the same. So I'm just gonna go in there, go for TP3 because TP2 and TP1 were hit, and then the stop loss is given. I'm moving past. That's an H4 chart. If I go back, what validated this buy trade was that the market is well above 70%, which is why we actually took this trade. Okay, CAT CHF is going down. Okay, let's move on. AUD USD looks like it's going down, guys. Let me look at the H1 chart. Yep, it is definitely going down. So AUD USD is going down on the H1 chart as well. I would actually jump in on this one. And then why is this trade valid? Is because the market is underneath the 100 period moving average, and then the volatility meter is above 70%, and then we've got a clear sell for TP2 and TP3. So TP1 was hit, now we're going for TP2 and TP3. Let's get it, baby. NZD USD, same thing. AUD, you see, markets that move the same, right, is usually when there's a strong presence in the market, certain currencies will move together. Okay, am I going too fast, guys? But certain markets would move together. So things like GBP USD and Euro USD, if there's like strong presence in the market, they'll move the same. Okay, and then the USD CHF will be usually most of the time will move opposite to what the Euro USD is doing. And then if you go deeper, the AUD USD and the NZD USD usually take the same direction. NAS 100 US 30 usually take the same direction. And what else, guys? There's quite a few. Euro NZD, if it's going up, NZD CHF is going down. So those types of things. Just do your research. You learn these things. Okay. So NZD USD is a trade on the H1 chart because the market is underneath the 100 period moving average, and then the volatility meter is above 70%, which validates our trade, so we can actually jump into that trade right now. Boom! Yeah, let's get it. Let's go. Okay, we don't want to trade. Okay, now I'm over trading, guys, but for the sake of explaining, AUD JPY is a valid signal for us to take because the market is underneath the 100 period moving average. Volatility meter is above 70%. Clearly, we can see that the market has already hit TP1. So if we were to enter into this trade, I was going to target TP2 and TP3. Oh, yeah, let's get it. All right, let's get it. Let me just do this. Okay, and this is on the H4 chart, guys. My favorite time frame is H4 and H. Actually, H4 is my favorite. Let me not even lie to anyone. Okay, H4 is my favorite, right? It's my favorite chart because you can literally just do your thing, man. Like you can literally do your thing. All right. So, okay, what do we have so far? So far, guys, we have a buy trade on the GBP AUD. We've got a sell trade on the Euro GBP. We've got, what else do we have? We have a sell on what, guys? AUD USD and NZD USD, right? Those are enough, in my opinion. Now we're just over trading. Right now we just over trading. We over trading, dude. Let's keep going. Let's look at gold. Okay, I'm gonna look at a few more markets before I disconnect. Okay, let's look at gold. We took a sell on gold, guys. Took a sell on gold. That was on the 15-minute. Okay, so we're still just holding it out right now. I'm still holding. Okay, I'm still holding on gold. Because of the news, the market might have shifted, but it ain't no thing. We're still going to hold that market. Let's go for US 30. Let's see what's happening on the US 30 and the NAS 100. Okay, US 30 on the H4. Can't really see much. Okay, it's giving us a sell signal. But here's another thing that you see what we're talking about, the support and resistance. You guys see that right there? Do you guys see that? What is that? That is a support level. So right now on the H1 chart, if you zoom in, you would see that the US 30 is on a support. Okay, so two things can happen here, right? The market can either break out to the bottom, or it can reject the support and go higher. Okay, so then we can just, because we know that, then we can just look at other trades. Okay, you feel me? All right, let's see if we can't just find one more signal that's worth our attention. I also like trading the German London indices. I like to trade those as well. They're also very tradable and very profitable. Okay, let's go, let's go, let's go, let's go, let's go. Which other market, guys? I think I miss. Somebody said Twitter. Okay, on my broker, I don't have I don't have Twitter in there, right? On the broker that I trade on. All right, then Bitcoin. What's happening with the Bitcoin? Bitcoin is looking like it's gonna tank to TP2. Looks like it's gonna go down, showing us signals to go to the downside, as you guys can see. We're underneath the 100 period moving average. Volatility meters at 70%. And then we can see that TP1 was hit, TP2 was hit and it retraced. Okay, so then we can actually enter again, go for TP2 and TP3. Boom! Just like that. All right, guys. Yeah. So, anyways, guys, this is the end. So, let me just see. So, we've got sell on Euro GBP. We've got a buy on GBP AUD. We've got a 15-minute buy that we've held in the morning on the UJ. Selling the Euro JPY, and gold still holding. AUD JPY on the H4 chart. CAD JPY on the H4 chart, we're selling. Okay? And then just like that, guys, we've got our trades. Okay? So which way? Okay, so somebody's asking which is the best way to draw a trend line. Okay, let me see if I can't. Let me just open up a different. Before I go, let me open up a chart where I didn't do anything. Okay. All right. So if you want to draw a trend line, okay, what you want to do is you want to identify where the market made a turning point. Okay. So in this particular instance, let me see. I just want to see if I can't get a better. All right, here's one. You look at instances where the market made like a turning point, like so right there, okay, over here, right, and then over here. So where the market makes a turning point, you would connect those points with a line like that, okay, right? So here I'm connecting this point and this point, just like that, right? Just like this, okay? That's how you would draw a trend line from there to there, right? You guys, from this turning point to that turning point, just like that. Let me delete this one, all right? And then from here, what am I doing? And then from here, from this point to this point over here, you guys see that over there, we just extend it. And then just like that, you've got a trend line, okay? Let me just highlight where I would put my turning points, right there. Wherever the market turns, wherever the market makes a turning point, that's where you put you connect your lines. Let's look at some more examples. Like here's a good example here. You start with the top, you can see that here's a turning point. Here's another turning point here. And then you just connect them with a line, just like that. Just that easy. It's actually very easy. Just connect it like that. this point to that point, and then that's your trend line. That's your resistance. Then if you look at the bottom side, you can see here, and then you can see this one over here, right? And then those are your turning points right there. Then you just connect them just like that. And then you've got your trend line, okay? So then this top one can be your resistance, and then this bottom one can be your support right there, okay? Let's look at another example. Let's look at another example. Okay, let's see. I'm just trying to see, guys. There's also a PDF book in the Telegram channel. Okay, so when you guys see it, all right. So let's go. Let me find. I want like a market with clear price action so you guys can see what I'm talking about. Okay, here's another one. Okay, so basically the first thing that you'd want to do is if you want to draw these trend lines, right? You'd want to identify where the market has turned. Okay, so right there, that's where it turned. Right here, this is where the market turned. The peaks basically, right? You start with the top side and then you end with the bottom side, right? So this is how you do it. You'd connect the lines like that. Okay, you'd connect the lines like this. All right, and then you just delete the ones that aren't necessary. So that one at the top, because the price isn't there anymore, you just delete it and you'd be left with that one. And then at the bottom, here's a bottom right here. Here's another turning point over here. Here's another turning point over here. There's another turning point. And sometimes you just need to use your discretion. You just need to keep the ones that make sense. Okay, you guys can see something like that. You just draw, you just connect them, and then you delete the ones that you know aren't relevant to what it is that you're doing. Okay, so that's how it would look. An easy way to do it also, right? If you're somebody who's struggling, the first thing that this is how I learned how to do it. Okay, is when I open up a chart, I would change the chart from a candlestick chart to a line chart. Okay, you see, candlestick chart, line chart, right? And then what I would do is I'll just put, if it's support and resistance, all right, well, let's just talk, let's keep it to our trend lines. Okay, I would connect where there's like V bottoms, like right there, and V tops, something like this. Okay, so I would use the line chart to do my support and resistance, horizontal support and resistance, like this, right? Like this. It's just another way of doing it when you're doing analysis, right? Something like this. And then when I'm done, I go back to my candlestick chart, right? And then from here, you guys can see that, it's looking pretty cool, right? You can clearly see the levels. You can clearly see the levels when you're trading, just like that. Okay, guys. So yeah, so I'll share some of these trades on the ones that I took. I'll share them on the Telegram channel. So basically, the trades that you'll see are based off of the H4 chart and the H1 chart. Okay, but yeah, anyways, guys, I'm gonna disconnect right now. Thank you so much for watching the video. I'll see you guys on the next one. We're gonna have another training session tomorrow. So keep an eye on the channel, and yeah, we'll link up soon, guys.